What if I told you that a blockchain project just partnered with a $1.5 trillion asset management giant to take on BlackRock in the Tokenized fundraise? And what if this same project is sitting at a crucial price level that could send it parabolic? Today we're diving deep into VeChain's game-changing partnership with Franklin Templeton, why this could be the catalyst VT holders have been waiting for, and whether we're about to witness the next altcoin season breakout. But first, let me show you something that'll blow your mind about what's happening behind the scenes. Alright, crypto family, buckle up, because what I'm about to share with you isn't just another partnership announcement. This is institutional money flowing into blockchain infrastructure at a scale we haven't seen before. Franklin Templeton, and we're talking about a company managing $1.5 trillion in assets, just chose VeChain as their blockchain partner for their Benji platform. Now, before you scroll away thinking this is just corporate fluff, let me break down why this is absolutely massive for the entire cryptocurrency market. See, we're living through the tokenization revolution right now. Real-world assets are being moved on-chain at breakneck speed, and the companies that control this infrastructure are going to be the Amazon and Google of the next decade. Franklin Templeton isn't just dipping their toes in the water here. They're making a strategic bet on VeChain's technology to compete directly with BlackRock's BUIDL fund. And here's where it gets interesting for us as investors. VeChain's native token VT just hit a crucial support level at 2.4 cents after being rejected from 3 cents. We're literally sitting at a make-or-break moment where this partnership news could either send VT to new highs, or we could see further downside if the market doesn't respond. But there's something else happening with VeChain that most people are completely missing, and it has to do with sustainability, AI integration, and a token called B3TR, that could be the sleeper hit of 2025. Now let me paint you the full picture of what's really happening here, because the mainstream crypto media is only telling you half the story. Franklin Templeton's Benji platform enables tokenized access to their $780 million Franklin on-chain U.S. government money fund. Each Benji token represents one share of the fund and maintains a $1 value, essentially creating a yield-bearing stablecoin backed by U.S. government securities. But here's where it gets spicy. This fund is currently the second largest tokenized treasury fund worldwide, according to RWA.XYZ data. The only thing ahead of it? BlackRock's BUIDL fund with $2.4 billion in market cap. So we're literally watching a David versus Goliath battle unfold in the tokenized asset space, and VeChain just became David's slingshot. Now, you might be thinking, okay, cool story, but what does this actually mean for VT price? And that's exactly the right question to ask. Because, institutional partnerships don't always translate to immediate price action. We've seen this before with other Layer 1 blockchains. But here's what's different about this situation. VeChain isn't just providing blockchain infrastructure, they're bringing an entire ecosystem to the table. BitGo is handling custody, KeyRock is providing derivatives capabilities, and VeChain's dual token structure with VTHO for gas fees creates predictable, low-cost transactions that institutional players absolutely love. The market is starting to price in enterprise blockchain adoption, and VeChain has been building real-world utility for years, while everyone else was focused on DeFi speculation. But here's what's keeping me up at night, and why I think we're at an inflection point. VT is currently trading at about 2.4 cents, which is a crucial support level. If this level holds and we see institutional buying pressure from the Franklin Templeton partnership, we could be looking at a move to 3.2 cents and potentially 4.8 cents on the upside. However, if VE breaks below this support, we could see a deeper correction that takes us back to previous lows, regardless of how bullish this partnership news is. Here's what the smart money is really betting on, and why this VeChain partnership is just the beginning of something much bigger. Franklin Templeton didn't just choose VeChain randomly. So they actually evaluated multiple blockchain platforms and, well, specifically chose VeChain because of their Proof of Authority 2.0 consensus mechanism. It's exponentially more energy efficient than Bitcoin's Proof of Work system, which is a pretty big deal if you care about sustainability. This ties directly into VeChain's secret weapon that honestly nobody's talking about, the VeBetter ecosystem and their B3TR token rewards program. Let me break this down for you because seriously, it's genuinely revolutionary. VeBetter is actually turning everyday sustainable actions into digital assets. Using blockchain and AI technology, whenever you recycle, reduce emissions, or support green businesses, these actions get minted as verifiable proofs stored on-chain. It's a whole new way of incentivizing positive change. Think about this for a second. We're talking about creating measurable economic value from environmental and social impact. This isn't just some feel-good marketing, this is a multi-trillion-dollar market opportunity as ESG investing and carbon credits become mandatory for institutional players. Jake Campton from VeChain's team explained it perfectly. With the way the internet works today, it's not really efficient to capture and turn real-world actions into measurable value. A lot of that potential just goes to waste. VeBetter solves this by creating NFT-like digital certificates for sustainable actions, backed by immutable blockchain records. Users earn B3TR token rewards and gain voting rights on future sustainability projects through the DAO structure. Now here's where the Franklin Templeton partnership becomes absolutely crucial. Institutional investors are being mandated to meet ESG requirements, and VeChain is positioning itself as the infrastructure layer for the entire sustainable finance revolution. The Benji platform integration gives VeChain-based businesses access to a yield-bearing stablecoin, while Franklin Templeton gains access to VeChain's sustainability ecosystem and enterprise client base. But let's talk numbers and technical analysis, because that's what ultimately drives price action. VT is at 2.4 cents support level, and a recent high of 3 cents shows strong buying interest. A 20% correction from highs indicates healthy consolidation. Institutional partnerships typically drive sustained buying pressure. Price targets, so immediate resistance is at 3.2 cents, major breakout level is 4.8 cents, and downside risk is below 2 cents, which would basically invalidate the bullish thesis. The key catalyst we're watching for is whether institutional flows from the Franklin Templeton partnership create sustained buying pressure. Early indicators suggest this could be different from previous corporate announcements because, it involves actual fund flows and enterprise payment integration. What's really fascinating is how this fits into the broader institutional adoption narrative we're seeing across crypto markets. While Bitcoin gets the headlines for ETF approvals, the real alpha is in infrastructure plays like VeChain that are building the plumbing for tokenized assets. So, Franklin Templeton just introduced an intraday yield feature on their Benji platform, which actually enables real-time yield generation. Pretty cool, right? This all leverages VeChain's fast settlement times and low transaction costs. Honestly, that's exactly the kind of technical advantage that really matters when it comes to institutional use cases. The competitive landscape is, heating up fast. BlackRock's BUIDL fund has $2.4 billion, Ondo's short-term U.S. government bond fund has $709 million, and now Franklin Templeton's FOBXX has $780 million. We're watching the infrastructure battle for tokenized assets play out in real time. Market analyst CryptoBusy recently posted, VeChain keeps shining. It's turning sustainability into a digital economy. With VeBetter, everyday actions that used to go unnoticed now hold real on-chain value. This sustainability angle is crucial because it's not just about crypto speculation anymore. We're talking about regulatory compliance, ESG mandates, and institutional capital allocation based on environmental impact metrics. VeChain's toolchain solution is already proving this works in the real world. Their IoT-based tracking through NFC and RFID tags was recently recognized as outperforming IBM and Hyperledger for anti-counterfeiting and supply chain verification. So, where does this leave us as investors and traders? We're at a critical juncture where VT could either break out to new highs on institutional buying pressure, or we could see further downside if the market doesn't respond to this partnership news. My take? This Franklin Templeton partnership represents a fundamental shift in how institutional players are approaching blockchain adoption. We're not talking about speculative DeFi plays anymore. This is real money, real fund flows, and real enterprise integration. The sustainability angle with VeBetter and B3TR tokens adds another layer of potential upside as ESG investing becomes, mandatory rather than optional for institutional players. Remember, this isn't financial advice. Always do your own research and never invest more than you can afford to lose. But if you're looking for infrastructure plays in the tokenized asset space, VeChain just made a compelling case for institutional adoption. What do you think? Are we about to see VT break out to new highs? Or is this just another partnership announcement that doesn't move the needle? Drop your thoughts in the comments below. And if this analysis helped you understand the VeChain opportunity better, smash that like button and subscribe for more institutional crypto insights. I'll be watching these price levels closely and updating you on any major developments. Until next time, stay profitable and keep stacking.